I'd like to talk to you about break-even points for planning using a course planning model and a program viability model. I'm Mona Walters, Dean of Institutional Planning and Effectiveness at Edison Community College in Piqua, Ohio. We began developing these models for course planning and program viability late in 2007 with the first release in 2008 and have used them since with annual updates. We'll begin with the course costing model. This is a simple model built in Excel that returns the course information based on enrollment. We decided on what to include in the model, and for us, the revenue, subsidy, and any lab fees associated with the course were important, along with the instructional wages and benefit package for the instructor and any direct expenses for the course. To build the model, we start with a course list. All of our courses are listed with their funding level, credit hours, and load, so we can easily return the calculations. And we also have a list of faculty with their salaries and benefits broken down to the per contract hour amount. To use the model, the user simply selects the course from the drop-down list that they're interested in. This one is Principles of Accounting. Selects the instructor or adjunct type that might be teaching the course, and the number of students in the course. The net income statement returns showing the revenue and expenses based on the assumptions given, and then the break-even table. This shows you exactly how many students are needed to run this course at a profit for the college. In this case, we need 13 students given faculty number 2 for Principles of Accounting. This information then is calculated for every course on our campus and taken into a course box as we build our program viability model. What you're seeing here is the course box for business management. We use a 3-year history period for each of these courses to feed into our program model. For business management, we have an average enrollment of 13 students, and using the program costing model, we've calculated the revenue and expenses for this course based on adjunct teaching and full-time teaching. This course, over the period of 3 years, 24% of the sections are taught by adjunct, 76% are taught by full-time faculty. That's all calculated down into a weighted revenue and expense and broken down to a per student revenue and a per student expense cost for this course. And like I said, we've done this for every course in our catalog. This information, the per student revenue and expense, then feeds the program planning model, which is shown here for accounting. We lay out the program based on the curriculum that we have posted in our catalog, so all the courses in the program. The revenue and expense columns that you see here are calculating the number of students in the program times that per student cost that I showed you in the course box over here. This feeds into the income statement for the program. The income statement also includes the full-time faculty salary and benefits and any additional adjunct wages that need to be calculated in. Any other departmental expenses specific to this program. And the net income is figured. The break-even table in this case then returns the net income based on the number of students and how many students are needed for this program to break even. And in this case, and given these assumptions, we need 12 students to break even in this program. We also include a column for return on investment, which is a simple return on investment, net income divided by expenses. For this, we use the return on investment for the number of students in the program, and we do some what-if scenarios on a +5 and a +10. And in our analysis, we look at the difference in the return on investments between those two additional amounts. We have used the course costing model and the program planning model now for 3 years. The course costing model is used at the start of every semester to know whether we can run the course based on enrollment, and the program viability model is updated and reviewed annually and used at the point of program review for all programs.